Hey everyone, in today's video, we're just going to do a short video on 3 stocks that I bought in my Wealthsimple portfolio today. I bought 1 US stock, 2 Canadian stocks, all 3 of them are dividend stocks, so this should be an interesting video. If you like this type of content, be sure to hit the subscribe button, hit the thumbs up button, it really helps me out with the YouTube algorithm as a small channel. And if you have any thoughts on any of these stocks or the market at large, would love to hear from you in the comments. But we're going to get right into this one. It's going to be a quicker video. Overall, just looking at how my portfolio did today before getting into the stocks, it looks like I was about flat in my Canadian and up about 1% in my USD portfolio rather. The 3 stocks that I bought, the first one in my Canadian portfolio was, drum roll please, Diversified Royalty Corporation. So this stock's been trending down over the last month or so. They haven't really reported much news, but one of the trademarks that they do own, which is Air Miles, has recently got acquired by a large Canadian bank, BMO. And I think there's some questions whether they are going to continue to operate that program, just roll it into their existing loyalty program, in which case maybe the trademark won't have any real value anymore. So I think that's why the stock's been going down a bit. With that being said, Air Miles is only about 10% or less of their overall royalty income, and I feel like the stock's almost completely priced out of the company already at this point. So I'm not too concerned on the impact of that based off a valuation standpoint. I'm getting a 7.5% dividend yield that gets paid monthly, and the rest of the royalties and the brands that this company own are really solid. I really like their Mr. Lube trademark ownership, which derives almost 50 to 60% of the dividend income that's coming from this stock. I think just those kinds of companies that are in kind of car repair, car checkup, stuff like that, we're a far way away from those getting moved out of the economy. And they're relatively defensive as well, regardless of what happens in the economy. People are likely going to be on the roads. They're going to be driving. They're going to need car checkups. So I like that revenue stream. They also own Oxford Learning Learning Centers. Sorry, choking on my words a bit there. Which is a good brand. Just going over here to see some of the other ones they own. Sudden Realty. It's a low-cost brokerage company. If you want to be a real estate agent for Sudden, you just pay them like $70 a month as the fee, and then you get to keep your entire commission. That $70 goes straight into this dividend that gets paid out to shareholders. Mr. Mike's is a steakhouse food chain, I think. Nurse Next Door is assisted living, and then Oxford we talked about. They also just bought Strauss Commercial Cleaners, which operates out of the US. So they have a lot of revenue streams. I like the 7.5% dividend. I like the royalty model. I like getting paid monthly. So I don't have a huge position overall here. It's about $6,000 in this portfolio. So I wouldn't mind getting this closer to $8,000, $9,000 as long as the yield stays well above 7%. And I like the results that they come out with. Going into the second stock that I bought here today. And the second stock is actually a US stock. It is Realty Income. So Realty Income, Realty Income is a stock that I recently acquired in my portfolio. It's still a really small position. But, my average price was closer to $62. I saw it down at around $61.40 earlier today. And I thought, why not pick up 5 or 10 shares? So I averaged into my Realty Income portfolio, or position rather, trying to own a bit more of this company. They pay about a 5% dividend yield, 4.8%. It's my only US REIT that I do own, and I'm looking to build this into a bigger position. I really like how they have very diversified assets across all of the US, but also about 15% of their assets are in the UK, Spain, and now Italy. So I think that'll be awesome if that continues to build out and this turns almost into like a global REIT holding to get exposure to triple net leases all over the world. They have a great management team. They seem to have a really good tenant mix. And I have a lot of REITs in Canada. Wanted to keep allocating to REITs to hold the exposure in my portfolio, but was looking for other ways to diversify this segment of my passive income. So going to the US and getting a US REIT I thought made sense. So I'm excited to build this one out. Still such a small position that honestly in the short term I really wouldn't mind it going down back into the 50s. Would love to get this up to 100 shares pretty quickly. So just thought it was a good opportunity to buy some more shares here today. And in that same breath, the third stock I bought here today was actually Riocan. So I have been wanting to continue to buy REITs as a source of monthly income. I know the risks associated with retail REITs, but I think there's not misinformation, but a misunderstanding of the type of retail space that these companies own. They own lots of retail in downtown cores, very flagship properties, national or international tenants, very long-term leases. Lots of people are concerned about debt coming due soon. Riocan has a pretty conservative balance sheet, all things considered, and has a lot of debt expiring in 5+ years. So I don't think there's going to be a huge liquidity crush or anything like that in the coming 12 to 24 months. The company makes about $1.70 in funds from operations trailing, which is about a 12.5 times multiple on funds from operations, which is a better indicator versus earnings for companies like this. I'm getting a 5%, 4.8% dividend yield, and I just have had a lot of cash sitting around. Only $50 currently in cash here, but I have over $15,000 in a cash high income savings ETF in my Wealthsimple account. I also have cash outside of my Wealthsimple account. So I just wanted to put the money to work. I think this is fairly valued at this point, but not undervalued to the point that I'm loading up the boat. I just keep nibbling on these positions over years and years, and the hope is over 10, 20 years, it enables me to compound these positions, both from capital appreciation, but also from the dividends I'm getting over time to build my passive income over time. So this has been a really quick video. Just wanted to share 3 stocks that I bought here today in the market. If you like this type of content, let me know in the comments. Would love if you subscribe to the channel, and please give the video a thumbs up, and I'll see you guys in the next one.